Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon all. Ira Epstein with your metals market update for this Tuesday, the 29th of January, 2019, and the time right now, 2:45 p.m. Central Standard Time. I want to tell you all already, I'm not going into the office on Wednesday, maybe not Thursday. We are due in Chicago proper, right in the city, to be as much as 50 below zero with the wind chills. Without them, could set new records of 24 to 28 below zero without a wind chill. They're already telling in the city, public transportation going to slow to a crawl, try to stay home, blah, blah, blah. We don't get this very often, and we certainly are used to inclement weather, but this is different. And once we know it's coming, what it's doing, a lot of people aren't going to be around. I spend time on the floor. Probably 2/3 of the people that I met aren't going to be in tomorrow, so that gives you an idea as to how it's working. In any case, we'll have something up for you. Now, you know, today we get the Apple earnings. They come out right after 3 o'clock. We have the FOMC wrap up tomorrow as to what they're doing. I will be putting out my normal subscriber updates and my morning subscriber video. So we've talked so much about that subscriber video, it'll be out because I can do that from anywhere. It's these videos that I need a studio for with my green screens and everything I have, and I just am not coming in. It's that simple. So let's take it where we're at in the gold. Gold keeps moving beautifully to the upside. It's a combination of the market thinking the Fed is going to take a different look, as it said it would, at how it lets the balance sheet run off. We're seeing problems in Europe with their economy slowing down. Mr. Draghi from the European Central Bank talking more about having to add more stimulus. None of this fights with the gold market. Then you get the stock markets had a rally, and now the question is this enough of a rally? What's going to happen with these earnings forecasts that keep coming out with poor forward guidance? So gold has got the best of all worlds, and it's been moving higher. You can see how the market is broken out in this pattern. It's gone now almost straight from 1275.30 up to today's high of 1310. It's about a $35 move, almost $10 a day over the past 4 or 5 days. You can see that we're over the 18-day average of closes with resistance at the upper Bollinger Band that we're now 3 times in a row on a closing base, actually 2 times, am I correct? Today for sure. Yesterday the market closed at 1303.10 over that number. It's this day that I want to take a look at. The close was 1298.10 right over the upper Bollinger Band. So you have 3 days in a row. The odds are that the market's got a 2% chance of staying over that band tomorrow. That does not mean it has to fall down sharply. It means it should be moving to the right-hand side of that band, given how overbought the market is, and that the way that I count in Bollinger Bands, that 95% of the time you'll stay within the bands. Well, in order to break out of the bands, out of sideways action, which we had been talking about right here, this little bit, you either got to get overbought or oversold, break out to the down or up, and it breaks out to the up. This is not uncommon to get over that band a little bit, but within a day or two it normally pulls back after 3 days up. In the GLD ETF, same thing. You're 3 days in a row now over that band, overbought. I'm just looking for pullbacks in the market. And finally, GDX up to the objective we were talking about. This market's the strongest of the group. It has the higher lows, higher highs. Over the 18-day average, closed strong yesterday, puts into place, if it's going to rally, potentially hitting that upper Bollinger Band, which is just what it did today. I view this as an area where probably the pros are stepping some money back on the market. In other words, take it off to come back in later, given it's overbought. Gold-silver ratio still correcting downward as silver has gotten itself up. Now, it missed hitting the upper Bollinger Band while it's overbought. It could certainly hit that tomorrow. It has got a pattern of higher lows and higher highs. Remember, so much is going to matter. Metals will react to whatever the FOMC does, and certainly what we hear about the Chinese-U.S. trade talks. As we look at copper, copper today had a bounce. Now, it's so strange. Yesterday down sharply 490. Today up 390. If you want to make sense of that, I wish you the best. You're overbought in the market. You are in an uptrend. The question is, does the market get any zing to get up to the upper Bollinger Band and the 100-day average? Certainly could. I'd look for the resistance 273.35 to 274, let's call it. In the platinum market, you're still in an uptrend here. Higher lows, higher highs. I still have the resistance point at the 100-day average. Support back at the 811.60 area, which is over the last break low. So that's still a good support area. In the palladium market, you've got a pattern of a higher high, lower low. That is not a trend. The market's trying to find its footing over the 18-day average. Momentum is still down, so while the market's got bias up, there's divergence as the slow stochastic is pointing down. And then, of course, we have the dollar index, which is caught in no man's land between the 100-day average and the 18. The market has a pattern of a higher high, lower low. It is not trending at this point, and momentum is sort of flat on the market. Now, one of the things we try to do is teach. And we've put together this fabulous trading kit, if you will, for you. And in the trading kit, it really covers all the basics of futures to get one familiar with it. We're talking all these different chapters: the history, the getting started, the market overview, the 10 trading rules, chart patterns, money management, technical analysis, fundamental analysis, introduction to options, and of course, all the different exchange brochures. So rather than finishing that up, just suffice to say, everything you see here, and believe me, it's really neat. It gives you a good education with it. How do you get it? Give us a call, 866-973-2077, or go to our website, www.iraepstein.com. I'll see you live, hopefully. It could be Thursday if the weather were to break, but Friday, I have every intent of being in the office right off tomorrow. Take care.